Thank you so much, Susan. The market is really not one entity. That's what we have to understand. They are a mixture of international players, big and small, that transact with each other over a set period of time. Now, what we can say as it relates to recession fears, the one organization that can decide whether the US is in a recession is the National Bureau for Economic Research. That's the body which takes holistic data, not just how the stock market moves, but GDP, employment figures, etc., to build a much broader picture of the health of the US economy. Because there is a divide, Sudan. There's the financial economy and there's the real economy. Now, when there's recession fears, typically it's when the financial economy takes a dive, which leads people to believe that this will have an impact on the real economy. Now, the real economy will have its impact felt as Trump's tariffs come into play, and the resonance of that, as we'll see. But as it relates to recession fears, that is the body that makes the decision as to whether that happens. But it is surprising to see such big sell-offs across different asset classes during this time.
And do you see the present meltdown bottoming out anytime soon? I mean, we saw Howard Lutnick on Sunday confidently say that there's not going to be a recession. We heard President Trump's, not say whether there will or there won't, but then you have other individuals, very credible individuals, saying we're headed that way. So what's going to happen in the near term?
Well, we shall see. That's the best thing I can say for this, because a downturn in stocks doesn't necessarily mean a recession is on the horizon. That's not what it means at all. Because the same way investors sell stocks, they can buy stocks again. Whereas if we see a dip in unemployment or a gradual slowdown in unemployment, then that has much longer term ramifications, and that takes a much longer time to play out because of what we see impacting that transition, if you like. When we look at the international picture, Suzanne, one thing that Trump's tariffs has had a big impact on is how it's had knock-on effects to other markets. For example, the U.S. makes it more expensive for people to import for companies to export into the United States. That means China doesn't sell too much into the United States. That means they're buying less goods, raw goods, etc., from their trade partners, which has the potential to slow down the economy because the U.S. is such an integral part of the global economy. That's how these things spread out over time, and it's the decision of policymakers and how they see the future of their policies and what impact they would like to have on their own economy that also has, whether you like it or not, impact on the global economy as a whole.
Very interesting.